Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce to the Blush Y'all with another video here on Blessed to Invest. And today I want to talk about the things you need to look for before you take a trade. These are going to be the 7 things you need to identify before pulling the trigger on a particular stock, option, future, whatever currency you're looking at before you enter the trade and risk your capital. So before we get into it, make sure you spam the like button. Spam the like button down below, and also sub for more content like this because we're going to be pumping out more stock related content, how to grow your accounts and how to invest your money properly. So without further ado, let's get into it. So as you can see right here, this is AMD. This is one of a very popular stocks on the S&P 500. And the reason why I pulled this up is because I want to show y'all what you need to do before you take a trade on any type of stock. This philosophy is going to be consistent whether you're trading a stock long term, short term, whatever it may be. And the first thing, as you can see from the lines here, is identifying the market structure. These are the support and resistance lines. Being right here, this blue line, being right here, this blue line, all these lines right here are support and resistance lines. And you have to ask yourself, why are these important? The reason why they're important is because these are levels that this market tends to reverse on. As you can see right here, let me draw that out. As you can see right here, we have this level of $130. And for some reason on AMD, every time it gets to 130, there's some type of pivot, there's some type of reversal, there's some type of serious movement that takes place around this $130 level. You can also see this on the $100 level, which is ironic because it's a full dollar level. $100 is an even number that everybody's looking at, and for some reason at $100 it tends to bounce there. Right around that level, it just tends to be areas of value where people like to look at and say, okay, I want to either sell right here or I want to buy right here. And it makes sense because psychologically, let's say you're in this trade at $75. You're thinking, okay, let me make a $25 profit and let me sell at 100. It's just easy math for people. And same in reverse. If you're shorting the stock, you shorted it at $129. You're thinking, okay, $100 is a good even level to cover my profits. And that's what you need to first identify before taking any trade. Identify where the support and resistance levels are, the market structure, because these are going to affect how the stock moves. If you're thinking you're going to get a 30% return and there's a big huge resistance at $100 and you don't identify that before you taking the trade, the odds of it getting to a 30% return are incredibly low. So make sure you're checking the market structure and give yourself some type of reasonable level where this stock can be, where you can take profits on it. And getting into taking profits, that's another thing you need to identify as well. That's going to be number 2 for us. Taking profits and identifying where you're going to be taking profits is very important. Before you get into a trade, you need to figure out where you're going to be locking in your profits. Again, if you get in, let's say you buy in at $100 and you want to sell at $130, you have to ask yourself, is this reasonable? Is this level work for me? Is there enough money on the table for me to make a decent amount of money on this entry? Has the stock previously gotten here before? Before you get into the trade, figure out where you want to get out of the trade, because a lot of people get into these trades and be like, okay, I'm getting in, I'm buying this company because I like it, I see it going up, so I'm getting in. And there's no type of game plan for how you're going to take profits, when you're going to take profits, because once you're in the trade, emotions start playing a factor. You start thinking, oh man, it's not really going up as fast as I would like to. It's kind of going down a little bit. I don't know what's going on here. And you need to have a specific game plan for what you're going to do in each scenario. So figure out where you're going to take profits is going to be very important. Me personally, I recommend market structure. That is the best and most effective way for me. I know a lot of other people do use different indicators. They might use like an oversold or overbought indicator, maybe a MACD indicator, or whatever you may use, figure that out before you get into the trade. How and when am I going to exit this trade? That's going to be critical to figure out. Next, before you get into a trade, you need to figure out your areas of value. Where are the valuable places where you know, okay, I can get into the stock and I know I'm getting a good deal on this company? When you are looking at any other market in the world, whether it's the car market, whether it's a housing market, whether it's a shoe market, whatever market you're looking on, there's going to be prices where you jump at them and say, okay, that is a great deal for this asset or this opportunity. The same thing happens in the stock market, where you can figure out, okay, based on where this thing was trading previously, based on the average cost of this thing, based on how prices are usually, I can tell if this is a good deal or not a good deal. And a lot of times you can tell that, one, by looking at the areas of support and resistance. Two, looking at, if you're looking at a longer term aspect, you can look at the price to earnings ratio. You can look at the income statements to see, okay, am I getting a good deal on this particular business? Warren Buffett talks about, when you're buying a stock longer term, you're looking at, what would it feel like if I were to own this company? Do I want to particularly own this company at this price? And I relate it to the housing market. Because a lot of people are able to understand the value in buying a decent property or a decent car, but when they look at stocks, they just buy whatever. They see it going up and they just buy whatever. But in a housing market or car market, you have an understanding of where areas of value are going to be. And if I have to own this for a long period of time, do I like the price that I purchased it at? If you get in at a good price, a lot of your issues are not going to come up as often. So let's say you get a great price, but it's not really going up as fast as you would like it to. It's kind of just consolidating a little bit. You're more comfortable sitting in this trade a little bit longer. Maybe you even have a dividend paying stock. You're more comfortable sitting in this trade because you know that you got a good deal on this company. You know you got a good area of value for this particular stock here. So if you're able to get your areas of value, and on a technical aspect, you're going to be looking at the support and resistance, what we identified here. You're also going to be looking at the overbought and oversold levels. And I'm going to add that study here quickly so y'all can see exactly what I'm talking about. It's going to be called the RSI indicator. You're going to be looking at overbought and oversold levels. So right here, this stock was oversold. So this was a particular area of value. And as you can see, it also lined up with the support. So this was a great time to purchase AMD. Also right now, we're getting another area of value when it's at the lows. So again, this may be another great time to buy AMD. This RSI, when it was up here, it was saying maybe it was too high. So from a technical standpoint, that is one way to identify if you're getting a good deal on a company. You can look at the RSI, you can look at the support and resistance, you can look at the MACD. I am going to do a video on different indicators to figure out areas of value, but this is one of them. This is one of my personal favorites for traders that are looking to get into understanding how to find areas of value. RSI is a great option for you, but there's hundreds, thousands, probably indicators that you can choose from to identify areas of value. So make sure you're figuring out your areas of value and make sure you're getting a good deal on this. That is going to be number 3, what you need to look for. Next thing you need to identify is your stop loss. A lot of traders have this issue where they don't go into the trade with a stop loss. They're thinking, oh, this is going to work out. Oh, this is going to be great. Everything's going to be rosies and daisies and butterflies, and I'm going to make millions of dollars in the next 3 months. I'm going to quit my job and life is going to be great. That is not how this game works. You have to understand you are going to take losses in this game. It's not about how many losses you take. It's more about how you manage your losses. If you're able to manage your loss properly, you can stay in this game a lot longer. You can survive this game. So if you take 5 losses and you take 5 wins, but your 5 losses are super small and your wins are a decent chunk of change, you'll be okay in this game. So you need to identify where you're going to put your stop loss. Again, for me, my strategy revolves around market structure. So I like to put my stop loss underneath the market structure, because I know if it breaks, and what is market structure? It's just these support and resistance levels, just another term for it. If you put your stop loss, let's say, let's change this up. Change it to like this. If you put your stop loss right underneath here, boom, and you bought it right at this little bubble right here, you know if it breaks below this, it already broke below $100. A lot of people are probably going to be selling this a lot lower, and you know it's a good time to get out of this trade. So that's particularly how I like to do it. Some people also use the EMA, which what we're looking at now, and you see how this stock follows the EMA. It trends up and below the EMA. So if it were to break above it, that would be a trend that is going in the opposite direction, and that's a signal to you, okay, I can sell this off. I don't need to be in this trade anymore. So that is another option. So let's say you got in right here. Let's say you bought in at this level right here. You're shorting. You shorted at $124, and then you want to put your stop loss like right above. So zoom out a little bit, and you want to put your stop loss right above. So let's say you put it right here, and then you want to just trail it with the EMA. So as the price goes down, it goes down, it goes down. You have your stop loss like right behind the EMA, and as it begins to reverse, you want to have you slowly guide your stop loss behind this EMA level. So once it breaks the EMA, you can have whatever rule you like for it. Just identify what your rule and stay consistent with it, and back test it, of course. But once you have your rule in place, you might have it a couple of points behind your SMA, or it's going to be right on top of the SMA. Once that breaks, you know you're out of the trade. So make sure you have a consistent stop loss. You're staying consistent with your stop loss. You back test it and make sure the system is effective. And then once you do that, you should be all good when you place your trade. So make sure you're setting up a proper stop in a good spot, in a safe zone where it's not going to be hit prematurely. And for me, I recommend putting it behind some market structure. That is the best way to do it. Next, the next thing I feel like a lot of people miss out on, and especially when you're swing trading, there's been a handful of stocks that I've been into where I've been swing trading them. They've been going in my favor. Life has been good, but some earnings comes out, or some pending news comes out, or something crazy happens, and all of a sudden the sentiment has changed, and I'm down 20 points on my position because some news came out. So before entering a trade, make sure you understand what the news catalyst is. Is this good news that's pushing the stock up? Is this bad news that's pushing the stock down? Is there pending news that's getting ready to come out? Is the CEO saying he's going to retire soon? I know for me, I remember one time, it was like 2018. There was a bombing. I was in oil stocks, and a bombing occurred all the way in Saudi Arabia. I'm in oil stocks super heavy over the weekend. I'm big up on my position. Life is good. I'm thinking I'm going to make like a couple $1,000s on this position. I'm super excited for this position. Life is good. And then the weekend arises, and then there is a bombing at the oil company. And I'm like, man, I messed up. I'm down on the position now. There's nothing I can do anymore. It is what it is. So situations like that, you can't really prepare for, because, you know, you're stuck in an oil company when there's a bombing, and that's kind of random. But make sure you manage your risk, not only on the weekends, manage your risk through earnings season, manage your risk through pending news. If you know some news is coming out, make sure you manage your risk. If you're going into the weekend and you're a little uncertain, if you have too much size on, feel free to take some size off before getting into your trade, or adding to your trade, or while you're entering the trade. This is one of these situations where you just want to be careful of when you're doing that. Identify that before you get into the trade and continue to manage that as you're into the trade. That's going to save you a lot of money, a lot of stress. Trust me. Don't go through what I went through trying to figure out how to trade news and all that craziness. Just figure it out. Make sure you check it before you get into the trade, before you're committed to the investment, and then take the trade when you know you have some knowledge of what's actually going on in the particular company. It's going to save you a lot of money. Next, we're going to talk about making sure you have a proper setup. A lot of people like to trade things. I know for me, when I first got started back in 16, 17, I used to just trade things because I thought it was going up. Like, it looked good. I felt good about it, and I would just buy it. Make sure you are trading the same exact system every single time. If you have a system for your stop loss, make sure you do it every single time. If you have a system for your entries, make sure you do that every single time, and wait for your trigger to occur. So let's say your trigger is, for me, we'll take my trigger on a swing trade scenario. This is my perfect trigger scenario right here. We are right on an area of value, a support level. We have a strong green candle that confirms it for me. Boom, bada bing. Once we see the confirmation from buyers on the candlesticks, we put our stop loss right underneath the market structure, and then we understand we're getting out at the next market structure, and we hop in. So wait for your trigger. It can be a candlestick trigger. That is a very popular one. I really like the candlestick triggers because when you're looking at candlesticks, they show you where the buyers and sellers are coming in. Before any indicator, before anybody is saying anything, buyers and sellers are going to tell you the story before any indicator is going to do that. That is one reason why, on a day trading standpoint, if you are day trading, forget swing trading for a second. If you're day trading, that's why it's great to look at this is not level 2. That's why it's good to look at the level 2 in the time and sales, because you can see where the buyers are coming in. Like on this particular scenario, buyers are starting to come in. They're starting to stack a little bit on the ask here, on the bid here. So that would be more of a bullish indicator on a shorter term day trading scenario. So that means you can get in with some comfortability, knowing that some buyers, some whales are on your side of the trend. So set up a trigger, identify your trigger, and make sure you're waiting for your trigger to occur. And it will help you avoid scenarios where you're just getting into trades just because it's in an area of value. You can't just wait for an area of value. You have to look for an area of value plus a trigger. That's what sets up your trading. So area of value, you found your good price, and then you wait for your confirmation from buyers, or you wait for your confirmation of your EMA to push upward. That is how you identify your trigger. So make sure you are doing that, and it will save you a lot of money. Trust me. If you follow this system right here, just follow the area of value. If you wait for a trigger and you wait for buyers to present itself, it's going to save you a lot of money. And then on top of that, the news, if you just wait for the news, make sure everything's in favor with news, you're going to be way ahead of a lot of traders that are in this game. So make sure you're doing that. Make sure you leave a like on this video. These are the things you need to look out for when you are trading. Before you get into a trade, these are all the things you need to factor in before pulling the trigger on a trade. If you follow these, you're going to be good, and all your trading is going to be successful. If you have any questions, let me know down in the comment section down below. I'll try to answer them as best as I can. I might even follow up with a video. And that's going to wrap it up. It's me, your boy, Blessed Applesauce. Stay blessed, and I'm going to see y'all next time. I'm blessed doing best.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.